Why? Wall Street, America and the world economy are in the early stages of a long era of degrowth, the reversal of economic growth and reduction in market growth as population growth adds new stresses on commodities resources, creates unrest, disasters and wars. Big problems ahead. Please listen. Earnings growth is in a long slowdown in all of the following 9 scenarios. Economy down. Earnings down. Stocks down. Trading down. Focus on the long term, on history, look past the noise about elections and fiscal cliffs. Why? This is an economic perfect storm. All 9 scenarios end in bad news for all markets, spell danger for your future income, your family's security. Start planning now. 1. 800-year growth trend, back to pre-industrial revolution levels. Yes, Business Week says America is condemned by history to slow growth. They opened with an IMF warning that global growth would slip below 2% in 2013. Then the review of Richard Gordon's provocative National Bureau of Economic Research study, is U.S. economic growth over? Yes. History tells us for 5 long centuries before the 18th century, it capped at a rate of just 0.2% per year. Then, the Industrial Revolution. A few centuries as U.S. growth shot up to 2.5% by 1930, driven by endless innovations, steam engine, railroads, electricity, more. But it's been downhill since 1950, with annual growth averaging just 2.1% per capita through 2007. North by East's Gordon warns, if the U.S. continues on its current trajectory, by 2100 the world's biggest economy will wind up back where it started, at 0.2% growth per annum. 2. Less than zero growth, long decade of decline, 2013 to 2022. Markets now totally irrational, read economist Garrett Schilling's Forbes warning. The bad news is good news effect can't last. Expect markets to nosedive. The bulls can't hear, will get caught exposed. Listen, there's a grand disconnect currently going on in global markets. Suddenly weakening economies worldwide are driving optimism in markets. Why? Global dependency on monetary and fiscal bailouts. Everyone wants more stimulus, more bailouts. Conditions are so bad, they're good. Dead ahead, a nosedive into Schilling's prediction of a long decade of less than zero growth, high stress chronic unemployment, accelerating global unrest, regional conflicts, higher Pentagon budgets, because much of the excesses and financial leverage built up in past decades, especially in the financial sector global and among U.S. consumers, remain to be worked off. Whether bull or bear, optimist or pessimist, you better prepare for the coming age of austerity. 3. Hyper-growth traders, new bubble repeats 2008 meltdown. This is a trader's ultra-short-term global reality. Their brains focus on the moment like a new age guru meditating on the eternal now. Today's closing prices, quarterly earnings, even annual returns may be of interest to Main Street investors. But as Business Week once put it, 15 minutes is an eternity for traders. Forbes tells the high-frequency trader's brain narrows to the 20 milliseconds it can't take quotes to travel from Chicago to Nasdaq's markup site in New Jersey. Traders leave stuff like long-term global population growth up to some higher power. Unfortunately, the trader's myopic view of the world will ultimately backfire, repeating the 2008 meltdown.